begin by acknowledging the traditional owners of the land that we're meeting on today, the Muinina people, and pay my respects to elders past and present. And we're here today. I'd like to introduce you to David Gilchrist. So probably about 3 or 4 months ago, the network of Peaks, so the network of Peaks Groups Community Services, got together and decided that we needed to actually, what we've been hearing a lot was about this impact that indexation was having on organisations, and that the cost of delivering services had increased so much to the point where many organisations were telling us they were delivering a deficit budget to their boards for the first time, or they're actually having to make some significant cuts in probably the place where we really can make cuts, and that's in people. So really a serious issue for our sector, I think, not just now, but as we move into the future. So what we did is decided that we really need to understand this issue of indexation. What does it look like? What's the impact of having an inappropriate or inadequate amount of indexation applied to our government funding? And what do we need to do moving forward to actually address this issue and develop an indexation model that's fit for purpose for Tasmania? So that's the work that we commissioned with David at the UWA. And the reason that we went with the WA University and to choose our very own university was that David's already doing some work of this nature in WA and in Queensland. And we just thought that there's a real kind of opportunity there to do some work that's sort of consistent across the country and have a similar kind of model. So that's what we decided to go with David. So I'm going to hand over to David now, and I know that he's very open to questions or just comments at any time during the presentation. People who are online, if you want to put something in the chat, it'd be hard for us to see you put your hands up, but if you put something in the chat, I think Charlie and I can just maybe monitor that and ask those questions on your behalf. Or if you want to ask a question yourself, that's also fine. So I'll hand over to David now. Welcome. Thank you, David.
Just the online window is not just one.
We haven't lost them all.
Yeah.
Actually, I just need to do an introduction before we start anyway. There they are. Just before we do let David launch into his presentation, we might just do a quick introduction around the room. And I might actually, if I'll just start. So I'm Adrian Coney. I'm the CEO of TASCOSS. Would you like to go next to that?
I'm Yvette Seaton, and I'm the CEO of the Women's Legal Service in Tasmania.
I'm Chris Oriel. I'm CEO of Meals on Wheels Tasmania.
I'm Steve Durney. I'm in the policy team at TASCOSS.
We'll keep going around the table and then we'll go to the people online.
I'm Stephanie Hetman-Meikle with Hospice Volunteers South Tas.
I'm Melanie and I'm with Gyra House.
Ash Vincent, Operations Manager at BapCare.
Charlie Burton, TASCOSS.
David Gilchrist, UWA.
I'm Josh from the RSPCA.
Josh. And can we go next to you, Kathy Brown?
Oh, good morning, everybody. Kathy Brown, a Board Director on TASCOSS.
Thank you. Miranda, can we go next with you?
Hello, Miranda Ashby, the CEO of the Link Youth Health Service.
Thank you. And Natalie? Or was it Narelle?
Narelle.
Narelle.
Hi, everyone. Sorry. GM Client Services with Launceston City Mission.
Thank you. Lisa? No. Lyndon?
Yeah, Lyndon, CEO of CTST, and I have with me two senior execs in Karen and David.
Thanks, Lyndon. Lisa.
Lisa, sorry, I couldn't unmute myself. I'm Lisa O'Toole. I'm the Administration and Finance Coordinator.
Catherine? What else?
CEO at Laurel House.
Thank you. And Tanya?
Hi there, Tanya Hunt, CEO, Youth Network of Tasmania.
Thanks, Tanya. Chris?
Chris Jones, Anglicare, Tasmania Chief Executive.
Thanks, Chris. Cameron? Jenny?
Jenny Edison, Mission Australia.
Thanks, Jenny. Cameron Allen is, TASCOSS employee, who's our communications officer. Trish?
Trish Mink, Director Corporate Services, Cancer Council.
Thank you. Olivia?
Hi, I'm Olivia Shackleton from Colony 47.
Great. And Laurel?
Hi, folks. I'm also from TASCOSS.
Excellent, thank you. And then there's 9 other people and I don't know who they are. So if you would like to jump in, please feel free because, yeah, we can't quite see. So Lyndon is one, Lyndon Leopard.
Yeah, hello everyone.
Good morning.
Lyndon from Local Government Association of Tasmania.
Thank you. Would
Morning,
anyone jump in or shall we get started?
Bradley McGill here. I'm an advisor for Palliative Care Tasmania.
Thank you.
Hi, I'm Edwina Duffy. I'm a Healthy Tasmania Project Officer in Public Health Services at the Department of Health.
Thank you. Okay, and we've had someone just join us in the room.
Hi, I'm Lola from the Tasmanian Community Fund.
Fantastic. Over to you, David. Thank you.
Thank you. Hopefully everyone can see the slides okay online. So I'll go through the slides and I'll contextualise the presentation in a minute. But just to say, really happy to take comments and questions as we go along. Please jump in. Really happy to be told I'm wrong. As long as we're all polite to each other, there's no problem with that either. So hopefully I can get as much information from you as perhaps you get from me to support the project going forward. It's great to have the opportunity to speak to everyone in the sector about this project and to give a little bit of context. One of the big things that we're focused on at UWA Centre for Public Value is looking at human services systems across the country. So not just looking at programs and, for instance, the NDIS is a disability services program within the Australian Disability Services System. It's a big program, but it's still only part of the system. We're concerned about the system, the sustainability of the system, and ultimately meeting the need in the community as well. My background is very much in industry, so I've worked in government, in the not-for-profit sector and in commerce before coming to academia. And I guess the other thing I'd say about the research that we do in this centre is that it's not foundational research. We're actually trying to create research or to use others' research in applied ways within the sector itself. So everything we do is about what can we do to apply those ideas, those frameworks, tools, etc. And to that extent, again, having you here to present to and to talk to is really important to help us to bridge that element as well. In terms of this project, the cost indexation project is one element of a number of projects we're undertaking that's looking at sustainability. Indexation is an important part of sustainability, but it's not the whole picture. And I'll talk to that a little bit more deeply in a second. But suffice to say, the number of projects that we have across the country looking at this issue from a number of different perspectives really boil down to 2 fundamental things. One is, how can we increase collaboration between government and the sector to achieve outcomes that make sense from everybody's perspective? And we know that the government doesn't have a bottomless pocket. It doesn't have all the money in the world to be able to give. Equally, we know the sector's under a lot of pressure in financial terms to be able to do the things that it needs to do. Tasmania is not an orphan in the Federation in that regard either, as I'm sure you're very well aware. But what has happened, and this is not new in the 30 odd years I've been involved in the sector, but what has happened most recently is 2 things. One is COVID, and we know what impacts that's had on the sustainability of organisations. The other has been quite an increasing extrapolation of costs faced by everyone, not just the sector, but everyone in the economy is facing higher costs of operation. And this sector, of course, is a sector that can't handle those costs in the way that you might do in commerce and so on. So my presentation today, I propose to basically do 3 things. One is to talk to the indexation project in the context of a wider sustainability project. 2 is to talk about the project specifically. But 3, before I get to that project specifics, I'd like to talk about indexation and some of the pitfalls that some of the Australian governments have experienced in terms of the way they've approached indexation and the way, I guess, to try and for want of a better phrase, tool up the sector to be able to respond to things that might come out of government in the context of the indexation process. What works, what doesn't work, what makes sense, what doesn't make sense. And again, really happy to take questions and comments as we go, but equally, I think these slides will be distributed. My contact details are on the last slide. I'm really happy to have a chat, respond to emails, or provide any information that I can. Equally, I'm really happy to get that information back the other way. I see it as a two-way street, so really happy to do that too. In terms of framing the discussion, then I guess one of the things about sustainability is that indexation is really an important aspect of industry level sustainability, and all of our projects are focused on the system, not on individual organisations. And I glibly at this point would say we don't care about individual charities and individual not-for-profits. We care about the sustainability of the system. Those charities and not-for-profits being tools for pursuit of the outcomes, not being an end in themselves. This, I think, is a really important point for the sector to get their minds around, because when we talk about economics in the sector and funding in the sector, we often confuse the sector, human services, with commercial outcomes. So if we talk about BHP or Coca-Cola, they are raison d'etre in their own right. Those companies have a purpose, which is to increase the wealth of their shareholders and the value of their company. In the world that we come from, their corporation's just the same, but their value is not in their own survivorship, but rather in the pursuit of the outcomes that we're looking to achieve. And that's the way we approach sustainability at a systemic level. So I'm talking about industry sustainability, not individual organisation. I'm also concerned with sustainability in relation to service mix. Every time there's a change in funding or an economic impact on the sector, directors, CEOs and others have to make decisions about what they do, how they respond to that. And because you can't respond economically, you have to respond in terms of quality and quantity of service, which changes the service mix. Now, there's a real issue around that in all developed countries around the world. And that issue is twofold. Number one, we have inadvertent mix changes by changing the way we fund or the quantum of funding, and no one has that unintended consequences to mind, but those people who rely on services to live their lives are the ultimate shock absorbers for that. So in other words, we talk about risk at organisational level, but it's actually the constituents that receive the services and supports that are actually the ones that have to bend with the wind of changing policy or lack of resources. The second thing that's really important is that we often talk, like we do with corporations, we talk about the sector in market economics terms. This is a real problem that the sector, in my view, the sector needs to rethink how it talks about itself in that context, because we talk about supply and demand. And in fact, in what we call quasi-economics or welfare economics, which is where this sector falls, in fact, demand is created by government. Government says what it purchases. Government says how much it purchases. Government says what it will pay for those purchases. There is no consumer sovereignty in terms of that demand. This is a really important point, because when we have communications to the community, those communications often are framed in supply and demand issues, not in the reality of quasi-market or welfare economics issues. So I say those things because I think they're really important points for the sector to start to get its head around, to reframe the community discussion that goes on about the sector. And I guess just using an example, I was doing a little bit of a road test with a few people on the NDIS funding model in Brisbane the other day. Just some people on the street, so to speak, some people I knew but not involved in the sector. Really pleased with the NDIS, really pleased it's there. Surely $30 billion is enough to do what needs to be done. You know, this is a great outcome. These are people that are, I would say, aligned with the kinds of feelings we have about the community. They're aligned with the need for these kinds of services, but the communication in the community, the message in the community is different to the message within the sector. And so I say all of those things because I think we have to reposition that. And if you like, the macro target that we have for this systemic review is how do we change that whole economic frameworking and framing of the sector going forward, of which indexation is one element. So the other thing that I'd say is that when we talk about sustainability, commensurate with my earlier comments, I define sustainability as the sector being able to deliver the right quality resource, services and supports in the right quantity at the right time, for the people that need those services. So it's not about sustainability organisationally, as I said before, but it's about the service mix being able to be sustained going forward. And all of the work that we're doing is looking at how that service mix at an industry level meets that need. I guess just for clarification or confirmation, so organisation sustainability is not an issue, not an objective in this study, and we're taking a systems perspective, not an individual or programmatic perspective. The other thing I'd say about indexation, and I'm sure you probably know these things, but in terms of indexation, there's a couple of rules. The first rule is that getting indexation right helps us in a couple of ways. It helps us to insulate against unexpected service failure, so it helps organisations maintain solvency as they move forward. It helps to maintain that service mix, and it also helps manage the government's budget and out-years forecasting in terms of what they're needing to do over the short to medium term. What indexation doesn't do, and again, I'm sure you're well aware of this, is that it doesn't mitigate cumulative, inaccurate or inadequate indexation gaps that have been accumulated over time. So indexation, by definition, is a retrospective review of cost increases for forward application. We're not actually forward looking and saying what the costs might be for the following year. We're seeing what they were, and if you like, we're bringing us back up to the starting line for a new round of cost increases in the following year. And so that mitigation is a really important issue that often you hear in public debates around indexation, that if we can get a bit more indexation, then we'll fill the gaps. But of course we're not, because there's an extrapolation of that gap as you go forward. If you get the indexation wrong this year, it means per force the indexation is automatically going to be wrong next year, even if you get the right figure in terms of cost growth, and so it goes. Does that make sense to everybody? And again, jump in if you want to ask any questions or make any comments. It also doesn't mitigate any capital shortfalls resulting from government policy change or other changes in the economy. The not-for-profit and charitable human services sector in Australia is grossly undercapitalised. And when it doesn't make a profit, and I think all organisations, not-for-profit as well, need to make a profit to operate in a market economy. When it doesn't make a profit, it's not building its balance sheet. If it's not building its balance sheet, it can't respond to innovation changes, other investments, and what we call renewal, replacing its assets, replacing itself in time to come. The NDIS is a very, very good example of where capitalisation or undercapitalisation is cause program failure. So with national 30% underutilisation in the NDIS principally caused because organisations simply can't capitalise to train people and do the things they need to do to stand ready to then provide services. So indexation is not going to fix that. We need to reframe the capitalisation of the sector in that regard. The final point there is, of course, it doesn't respond to changes in need for services either. Indexation is about what it costs to do what you did and replicating that in the following year, as opposed to meeting increased need that I'm sure your services are facing as a result, say, of COVID and so on, which goes to those significant cost increases. I just realised I've jumped to item 2, which relates to shocks to the economy like COVID, where actually you have to have specific purpose policies to be able to support the sector going forward. The indexation will never cover that. JobKeeper was a good example of that type of policy, of course. So all of that adds up to 3 columns or 3 supports of sustainability that we think are important. The first column there is a realignment on a regular basis of the comprehensive cost of service delivery to rebase the indexation. In other words, to be able to understand what the total cost of services is at a point in time, to then call that the base rate or 100, and then to move forward with indexation. And we're suggesting that there needs to be a 5-yearly comprehensive tender process, which doesn't have to be a competitive tender, but it does need to be a process of informing government of the comprehensive cost of service delivery for your organisations, which then sets your indexation to 0, and then you start again with indexation going forward. That informs budget out years and captures the real cost on a regular basis, which is really important. The second column there, which we won't talk about too much today, is that need to maintain the capacity to meet policy and change and to innovate, to replace itself, the sector needs to have appropriate capitalisation, and capital injections should be made by governments when they change policy or introduce new frameworks. And again, picking on the poor old NDIS, there was no capital injection to be able to help organisations reframe the way they did business under the new regime. And in some states, that was a very substantial cost to those organisations, and underutilisation, again, is a very good indicator of that lack of capacity and that lack of capitalisation. So the third element, which of course is our focus today, is the annual response to cost experience, which is the indexation process. So what was it? What were the costs last year, and what should we add to the income of organisations to be able to sustain them, to deliver the services that we need them to deliver going forward? And that's those three items, to our mind, makes up for system sustainability at the end of the day. Look like you've got a question? No? Okay. I can only see your eyes, so I'm just judging by your killer look. Okay, so what is a cost index? I think this is also an important point, not because people don't know what an index is from being on the receiving end. Most people are well aware that it's a percentage that's applied to income in order to give you that boost that you need to be able to cope with increasing costs. But I wanted to make a couple of observations in relation to a cost index that I think are helpful to people to understand what the complexities are in this process and what kinds of things we need to do in terms of pulling together a proposed index for the sector. First and foremost, any index, any cost index brings together a basket of goods, which is a figurative basket of items that typically go into doing a particular thing. You would all be aware of CPI, and of course CPI is that basket of goods that's representative of running a household, and it's got all of the things in that basket that we would expect the household to incur in order to operate from year to year. In the case of human services, the kinds of things that probably would be in that basket would be labour. Labour, as you all very well know, is about 70 to 75% of the costs of running a human service. But it would also include things like, hey, shall I start again? I'm not sure I could. So labour input is a really important part. Cost of capital is also an important issue. But also there's other various products and services that go into delivering human services. So things like audit, IT, subscriptions, all of those kinds of things are all part of that basket. So in terms of the cost index, not only do we collect those costs and the quantum of those costs, we're also concerned to understand the proportion that each of those items in the basket represents in terms of total cost. So the calculation of index not only, if you like, identifies the quantum of cost, but it also identifies what pro rata a contribution of those costs make to the total cost of the organisation. Now, the Australian Bureau of Statistics currently creates a number of industry indexes. Some of those industry indexes are for very small industries, so taxpayers' money is being used to index some very small, almost economically insignificant industries, certainly compared to this sector, which is a very significant economic part of the economy. But those ABS statistics are proxies or potential proxies for indexes that might be applied in human services. So one of the things I'm really keen to say is that while we've created a proxy, rather an index model statistically, we're looking at collecting data to be able to test that model, but we also want to see whether there's some proxies already being created that can stop us from having to collect data from people and to go through the cost of time and money in being able to respond to that on a regular basis. The trouble is the Australian Bureau of Statistics also creates what they call the Health and Social Services Industry Cost Index, a CPI index that is specifically focused on health and social services. This is potentially a great opportunity for the sector, but we really have to all get together, and I've said this to governments as well, to get onto the ABS to disaggregate health from social services, because social services are swamped by the health data, which is so substantial that we can't get anything meaningful out of that statistic that can help us. But if the ABS did undertake this research and undertake the calculation of this index, then we would, as researchers, as sector representatives and as people in government, would be saved a lot of time and money in terms of being able to come up with this, because at the moment it's in the hands of government to be able to create these indexes, and I don't think that works. So one of the things that certainly is very clear from this broad project is that as many governments, people, industries as possible need to get onto ABS and try and get them to disaggregate that data so that it can help us to understand what's going on. So the current methods used in Tasmania, there's a raft of different methods from what I can tell, and we're still in the process of looking at how those methods impact indexation for various subsectors within the industry. But I wanted to touch base on two elements here that are commonly used across the Australian Federation for indexation, or as a proxy for indexation for this sector. And that is a combination of the wage price index and CPI, or consumer price index. So in WA, we have a combination of the two. 80-20 is typically the way it goes, 80% wage price index, 20% CPI. And as you can see there in Queensland, they have 75-25. South Australia, they have 2.5 as an arbitrary indexation rate that they've created, similar in terms of arbitrariness to the government indexation rate used in Tasmania, it seems to me. There's two fundamental problems with WPI and CPI before we start, and they impact different states in various ways. So, for instance, WPI is measured by state, whereas CPI is measured by capital city. Tasmania, that might or might not make a difference, but in a state like Western Australia, where in Perth, right down in the southwest corner, going up to the Kimberley, a litre of fuel costs about $1.80 in Perth, about $5 up in the Kimberley, then there's a real difference in terms of what the CPI impact might be, and an under-indexation is clear in that case. But having indexations based on two geographical arrangements or two different communities is also a real worry. There's also some other worries in it, and I want to raise this with the sector because, as I say, a lot of governments use WPI and CPI as indexation, and I think a lot of governments are talking about continuing or introducing this kind of combination, and I think the sector needs to be aware of where the limitations are in using this combination for indexation for the industry. So, for instance, if we look at this slide, you can see this is relating to CPI. I hope you can see on the left-hand column there's ticks and crosses. The ticks actually relate to the items picked up by CPI that are relevant to human services. On the right-hand tick and cross column, you can see the items that we believe should be included in an index that relate to human services. And you can see there's quite a disparity between the two. And that makes sense because most human services don't use the same things that you use in a household to run the household. There are some commonalities though, things like electricity and water, of course. And indeed, when you calculate CPI, the ABS does two things. It creates two pockets or two groups or two baskets, if you like, and then combines those baskets on average. And the two baskets relate to discretionary and non-discretionary expenditure. Discretionary expenditure is the expenditure that is impacted by elasticity of demand, which in economics terms means that as the price goes up, the consumer opts not to buy or buys something else because they don't feel they're getting value for money in terms of the price for that particular good. That is an elastic good, or in the case of the way we term it in terms of the CPI, is a discretionary good. You don't have to have it. On the other hand, there are non-discretionary goods which increase in price as well, but which consumers have to purchase, and water and electricity are a good example of that. Fuel is another example that came up earlier today as an example of non-discretionary items. So you've got two pools of costs with different reactions from consumers in relation to cost increases, discretionary and non-discretionary. Now, if we look at this next slide, you can see how that impacts not-for-profit human services. This slide is only to demonstrate the difference. There's no particular, it's not a Tasmanian slide or necessarily relevant information to our discussion, except to point out that you can see the CPI line, which is the second top line, the light blue line that runs through that graph. You can see underneath that there's an orangey red line, and that is the discretionary household costs. So you can see, as a matter of course, discretionary costs are always going to increase at a lesser rate than CPI because people can opt out of buying them. And if I produce those goods, I need to be aware that no one's going to buy them if I put the price up too much. So I have to absorb some of the cost increases of production. On the other hand, with non-discretionary expenses, I'm, as a producer, less worried about what the price is because consumers have to take it or leave it, and they have to take it up to a certain point, which means that non-discretionary indexation is much higher than discretionary. But what's really instructive for us is the fact that that blue line, the CPI figure, is a combination of both or the average of both. What is also instructive is that of all the costs in the basket of CPI that are relevant to human services, they're all non-discretionary. So even though CPI is not relevant, in fact, it's a higher rate in the CPI calculation that's relevant to the human services than those costs that are non-human services. Just out of interest for everyone, that bottom line is the CPI without cigarettes and alcohol. So that gives you a bit of an idea of what the tax being collected on those items is as well. Does that make sense to everybody? Yep, sorry.
Yeah, someone's just asked if they're not sure they have the correct slide on the screen. We're now up to a slide with WPI. Can you see that? Let's keep moving, and whoever's on screen, just let me know if it's not syncing.
We're recording this as well, so I'm sure the recording can go out to people. So with wage price index, this is a more difficult or rather a more attractive index to use. And I mentioned before that 70 or 75% of costs that are incurred by human services are labour costs. And governments are very attracted to WPI because it seems to be commensurate with the fact that at least 70 or 75% of your costs are core. But like the previous CPI slide, the WPI slide has down the left-hand column ticks and crosses, a lot more crosses than ticks, because they're the items that are actually taken up in WPI, whereas down the right-hand side column are the green ticks of things that we think should be included. So in other words, things like increases in superannuation costs are not included in the WPI index created by the ABS, which are very material from the point of view of organisations, particularly over the last couple of years. So that's the first issue where WPI is actually not designed to support indexation. It's designed to help industry to understand the trajectory of wages, for them to budget, but to also negotiate with unions and others about their pay going forward. In other words, it's an index intended to show the trajectory of remuneration, not intended to show the cost of service delivery. Does that make sense? In any industry. And so it becomes a real problem for us. It's also there's also a more subtle problem in terms of WPI, and that is that the human services sector doesn't really proportionately shift the needle on WPI very much at all. And this is because it's a predominantly very low paid, one of the lowest paid sectors in the economy, but also a very casualised employment rate, which means that a number of aspects of remuneration aren't included, but also that the proportion of costs compared to other industries doesn't shift the needle to give us a good indication. The third point I would say is that even marginal cost increases for very, very fine-lined human service organisations have a real impact. And so I think WPI doesn't really meet the needs in terms of the sector going forward.
Can I ask a question about that, David? When you go back to that other slide, it's got on there female-dominated workplace bias captured. So that's costed in our industries, that's reflected, but it doesn't come into the wage pricing.
No. So it's all part of that subtle thing that I said, where the industry is substantial economically, but the wages are so low and so casualised that they don't shift the needle on WPI in the magnitudes that you're feeling it as an organisation.
And most of our organisations are predominantly staff by women.
Exactly, yeah, which is, kind of
the structural problem.
Yeah, a structural problem. It's a very low paid, if not the lowest paid industry, and it's highly casualised. And those things are not able to be picked up in WPI because it's not the purpose of WPI. It's just simply to say, okay, this is where remuneration's heading. If you're an employer, you need to think about this when you're negotiating with people about their next pay rise or whatever it happens to be. piece of work that we're doing that's specifically relevant to Tasmania within the program is a State of the Sector report, which we do quite often around different jurisdictions. Most recently, we did one in Queensland, but we've done Northern Territory, WA, and so on. And this State of the Sector report is in the process of being undertaken, so I can't give you final results and so on in relation to it, but it looks at data from the ACNC database, from state government data, Treasury data, Commonwealth government Treasury data, and some ABS data, to try and get a sense of the trajectory of financial sustainability of the sector, human resources sustainability, so workforce sustainability, and the sector's contribution to the economy overall. And I think this is also a really important set of findings that I want to share with you, because they help to do two things. One, to identify that there's real financial pressure, and that financial pressure is resulting in sustainability outcomes that are manifest in the data that we're looking at, but also that this sector is economically incredibly important to Tasmania. So in other words, if Tasmanian government is going to support a sector for economic growth and economic sustainability for the whole economy, this is the sector to do that in. There's relatively few other sectors of the size that are able to return those kind of results, and I'll get to that shortly. Suffice to say, I thought these factors might be helpful to you in terms of explaining and discussing within the industry why a separate, new or more appropriate indexation process would be relevant. For instance, in this time period, 2018 to 2020, and I know it's aging data, but we rely on ACNC data, which typically takes about 12 months to be published, so it makes it very difficult. But the aggregate surplus reduced in the sector in Tasmania by 10.5%. So this is in charities headquartered in Tasmania by 10.5%, which is a very significant reduction in aggregate profit for organisations. Now, obviously, those organisations are on a spectrum. There'll be some that made losses and some that made significant losses. There'll be some that made profits and significant profits. Those two tails are very, very thin, though. That mostly it comes back to a mean around zero break even or a couple of % profit per sector. Now, the sector really needs to make a profit. Without a profit, you cannot, in a market economy, build your balance sheet, and therefore you can't reinvest and reinvent your organisation. So I think that's a really important issue. 54% of Tasmania's charities in that time also did not cover health CPI. So the closest proxy we have to cost indexation created by the ABS indicated that the financial performance of these organisations was sub-CPI. In other words, it wasn't keeping up with CPI, which means that financial sustainability is increasingly pressured in the sector, which again are probably things that you know, but one of the purposes of this slide is to try and give you some words to put around that, you know, what you're feeling and what you're seeing as opposed to what's happening in the economy as a whole. This one, I think, is also a really important point for a couple of reasons. So what we're saying here is that between 2018 and 2020, the charitable sector in Tasmania increased their income by $313 million. So they increased their supports and services, but it cost them $322 million to do that. So the increase in income, the growth, was actually funded by the sector in terms of the development of services and the increase of service delivery within the community in Tasmania, which I think is a really important point for the sector to be aware of. It means also,
So what's covering the gap?
You are.
No donations? Or?
It's reserves being used. So there could be donations, there could be well, there won't be volunteering because these are raw costs against raw income. There could be other programs that you might be putting in place, but this is the net effect. So at an aggregate level, industry level, the reserves of the sector were reduced by $9 million in that year as a result of having increased income and increased service delivery. Does that make sense?
It's huge. If that keeps going,
yeah.
The implications of that.
Keep going.
No,
It's all got
The other
yeah,
thing,
exactly.
Absolutely. So this is, and I've got to tell you, this happens in every state and every territory in Australia. There's not one jurisdiction that we've been able to report, you know, the organisations had net increase in income as a result of service growth. They've all had net decreases in profit as a result of service growth. The thing that this really stands out and tells us is that in the sector, there's a lot of mythologies. One of those mythologies is that you can build economies of scale by growing the size of your organisation. The margins are so thin on those prices that the contribution margin cannot achieve economies of scale, and this shows that. Other research that we've done looking specifically at the disability services sector reinforces this, because we identify that large organisations and large and extra large organisations are not as financially stable as middle-sized organisations. Small are also under financial pressure, but the risk is less important in terms of $250,000 turnover organisations. The sweet spot is somewhere about $10 to $15 million, it seems, in terms of being focused on a specialisation, having relationships with organisations to fill in your services rather than being a conglomerate. Happy to talk to that a little bit more if that's useful. But again, I think this is a really important positioning statement for people in the sector when you're talking about indexation. So that impacts service mix. There's no doubt that organisations would have to respond to the economic signals that are coming out of their annual reporting process, and that would then likely change either the quality or quantity or both of services that are actually provided. That's the only levers you have. Of course, ERO and wage case decisions are having impacts across the sector. This is, again, the charitable sector, not just human services, and it's only the sector with headquarters in Tasmania. So there would be a lot of other charities suffering as well that are headquartered, say, in Melbourne or in other cities that are operating here. And indeed, that $9 million gap would be much higher in terms of gaps that are experienced by non-Tasmanian headquartered charities. The health and social assistance industry contribution, though, was almost 14% to Tasmania's GSP in 2021. So not only all of those things financial impacts that charities have faced and had to negotiate, but on top of that, the sector actually contributes positively to the economy to the tune of almost 14%. So I think this is a really important statistic to be aware of as well, because it means that the traditional myth around human services and the charitable and not-for-profit sector generally, no matter where you go in Australia, is we've got to get costs down. We've got to, reduce the amount government's paying into that sector, when in fact every dollar that's paid into the sector returns 14% to GSP. It's a really, really significant economic industry in the Tasmanian economy. Again, same sorts of figures are replicated across the Federation. This is not a Tasmanian phenomena. This is a national phenomena in relation to this sector. Okay, and this wouldn't be news to you, I'm sure, but just, I guess, to complete the picture a little bit, between 2019 and 20, about 6,000 volunteers discontinued volunteering for COVID reasons, and again, I'm sure you're aware of that. What is interesting out of this, or it's interesting to me, which might say something about my personality, I'll let you judge, but it is interesting to me that the Australian Accounting Standards Board and a number of us are looking at how we report volunteering from a solvency perspective. So one of the things that COVID was really good for, use that phrase, was that before COVID, people like myself were saying we needed to do certain things. Recognising volunteering was one of those things, that organisations relied on those volunteers as a resource that delivered services. Often organisations even contract to deliver services at a price that incorporates or assumes volunteer resources applied. For the first time in COVID, we had a realisation or a crystallisation of the risk around that strategy, where organisations weren't able to deliver services simply because they couldn't get volunteers and they had significant solvency problems. And again, this is a nationwide issue, it's not a Tasmanian issue, but I think this is an important consideration as well. We often kind of talk about volunteering as a side issue. We often talk about the two-way street of volunteering. It's good for mental health for people and so on. All of those things are entirely valid and appropriate, but there's a really substantive solvency issue around volunteering for organisations as well. And we need to, I think, recognise that. Okay, so the project itself, so this is the sliver of project as part of the bigger program. Essentially, we're collecting data from a group or a panel of selected participants. And the reason we're selecting participants and creating what we call a panel is because we want the results of this process to be extrapolable across the entire population or across the entire industry. The better we can get that panel representative of the sector, the better we can actually say this is what's happening in Tasmania as opposed to what's happening in those particular organisations. We're collecting 19, 20 and 21 data, even though 22 is over for many organisations, because the ACNC data is also used. We try and triangulate data that's been given to us by organisations as much as possible. We want it to be as clean as possible, and we certainly don't want the analysis to be challenged by anybody. And so we are choosing to use 19, 20, 21 because the ACNC and Treasury data is available for those years, and I think that makes sense. Our intention then is to apply that data to a number of indexation models. Now, as a from a statistician's perspective, this is actually really easy. There's a thing called the Fisher model, which is a statistical model that we use to index the kinds of industry that this industry is. And we can just get that out of our textbook, collect data from everybody and make that work. Now, there's a whole lot of problems with it. One of those is collecting data. It's a lot of time and money for organisations to contribute when they don't have resources to do it. It's also time and money for government to participate in that kind of process. So as much as we have, if you like, a handbook model that we can populate and use, we need to be able to compare what that model says with currently produced ABS indexation industry indexes, because we want to try and find a proxy that works rather than necessarily having that model, because creating a model creates ongoing work for everybody, and it's work that's very difficult for organisations to respond to. Does that make sense to everybody? So we're looking to see what kind of proxy might be a better way to do this that reduces the cost to the sector and to government. So we'll look at ABS models. We'll ask you again to advocate for the separation of health and social services so that we can actually try and get the ABS to start looking at this sector a lot more seriously. But at the end of the day, we will arrive at a workable model, which will make a recommendation principally to take TASCOSS and the other peaks that are involved, but we'll also make that known to government. We've presented to government in relation to this program, and we'll continue to collaborate with them. So the idea of the project is to have a collaborative approach. We think it's really important that government and the sector are involved in this process, and to have a no surprises outcome. So we don't intend to sort of throw a report on people's table and walk away. We really want to enculturate the outcomes and to make sure that we're all on the same page in terms of the language describing that and so on.
And a question from the online floor. What is the workload for us to participate?
Nothing. It's really easy, and we're really happy to get anyone to participate. What we have to do is to collect 3 years of data using an Excel spreadsheet that looks at financial, human resources and service delivery data. Different organisations have expressed different impacts on them in terms of supplying that data. Smaller organisations tend not to be as delineated in their financial reporting, so it makes it quite hard sometimes to be able to excise the data. Larger organisations have, generally speaking, been much more comfortable with contributing because they have accountants and others to be able to do the work. So I'd be really happy if someone wants to contribute. I'd be delighted to step them through, or one of my colleagues, Claire or someone, will step them through the process and make sure they're comfortable with it, if that helps. But typically what we say to people is it takes about a day, but for larger organisations, part of that day is the accountant, part of that day is the human resources manager, and part of the day might be the operations manager or whoever actually does the statistical analysis in terms of service delivery itself, because we need to know that proportion.
But if I could just add that getting the data is critical to this program and to this project being finalised. We can't actually proceed unless we've got the data. And I know that a lot of organisations, and a day out of the week is a lot, particularly for small organisations. I really understand that. But if there's any way that you think you could partner with us on the project and support it, we would really, give me a call. I'm happy to talk through ways that TASCOSS may be able to support. But it really is, and we know that in some of the other states that have already commenced this work up to a year ago, they still haven't finalised the project because they haven't had enough organisations to sign up. So the sooner we can get this finalised, we can get this into the budget process and hopefully get this considered for next May's budget. So yeah, really encourage anybody who's thinking about it to give us a call and have a chat.
And the same person's just asked or made the point that small organisations are less likely to participate. And yeah, that will skew the results. But yeah, like, I mean, I wonder if, Adrian, if there is a smaller organisation who's been through the process, maybe not to put more pressure on them, but if
yeah,
give tips to others.
Yes, absolutely.
We do have a couple of other points here.
Perhaps if I, we'd be delighted to speak to anyone that wants to contribute data, or, you know, everyone we speak to says, yeah, this is an important project, but I do get the constrictions that organisations have, and I don't underplay them at all. But again, speaking to TASCOSS, and there might be ways that TASCOSS can assist, but also there might be some specific data that you can help us with that's not the whole thing. So talk to us rather than kind of making assumptions about whether or not you can play, if that makes sense. We'd be really delighted to have that chat and see if there's a way that we can still make it work. The other thing is that, yes, the large organisations to a degree will skew the way data or results apply, but we also have a number of robustness tests that we use to try and refigure that statistically. So we will have the best outcome that we can possibly achieve and the most legitimate outcome. One of the outputs will be a report that goes through basically what we've done. And now I get most people, you know, it's not going to fly off the shelves at Dymocks or anything anytime soon, but if you are concerned about that, there is a report that will allow you to go through and understand what we've done and to replicate that, so that there's no legitimacy question marks over what we've done and what you're contributing to, perhaps more importantly.
Two other comments from online, or one question. One I can answer because I've been talking about this for a while. Are you going to provide a detailed list of what data will be needed and the time frame? So that's Bradley. Absolutely, the best thing is to get in touch with David or his colleague Claire, and the emails will be up in the slide, and they will tell you exactly what data is needed.
And we can also send out that spreadsheet if we have that.
Yeah.
Colleen asks, can you get the data from the ACNC because they don't have the day at this time of year?
No, it's not. The ACNC data is just not detailed enough to help us. We do use the ACNC data to triangulate what we've done to make sure that the outliers are dealt with and that people haven't transposed or done something in terms of the data they submit. But I'd love to. Yeah, that's the short answer. I'd love to. Yeah.
Okay.
Yep. Okay. All right. So that's the project itself. A couple of further notes, and I've spoken to a number of these. For instance, in terms of the cost of maintaining indexes and so on, are really important considerations. But I think points 2 and 3 are also something for extending the conversation beyond this particular need. I think one of the big problems with indexation has been that on governments and the sector side, and I'm happy to be disabused if you think I'm wrong, but we often look at it on an annual basis and year after year over a period of time, but as a consecutive years rather than as a trajectory to getting to increased sustainability over a longer period of time. And there's a couple of things on that slide that are germane to that. First and foremost, we are investigating and looking at technology as technology advances to be able to actually automatically download data from panel rather than having to ask people to put their time and effort into giving us the data. And that'll make a big difference. Now, there's a whole lot of issues around security and other things that we have to deal with, but I think that's a really potential positive outcome for getting a very specific index for specific subsectors at some point. Part of that, though, relies on the Australian Non-Profit Standard Chart of Accounts, which was issued or developed by QU2, Queensland University of Technology, some time ago, adopted by the ACNC and adopted by the Tasmanian government about 8 years ago as the preferred mode of data collection. I think we need to revisit the Standard Chart of Accounts and really put that under the microscope, because then that will help us if we are able to automate, then we're able to drag like-for-like data out of systems and create indexes without even bugging you about how that works. There's a little bit of blue sky and a bit of time to go to get that right, as I say, from an ethical perspective, a security perspective. But I'd love you to go away and think about that standard chart of accounts and how that might apply to your organisation in order to support that in due course. The final point that I'd put there is that the industry plan has been developed. I'm sure you're all well aware of that, and there's some really good stuff in there around focusing on and reporting on outcomes, so actual outcomes from the sector's operation. One of the things that I've indicated that I think is missing from that is a 5-year industry finance plan. And so there are a number of really good elements in that industry plan. They all make sense, and it's a collaborative thing, which is also a really exciting proposition. But there does need to be a 5-year finance plan to see how the finance trajectory is going to work, to give clarity and certainty to the sector, but to also give clarity and certainty to the Treasury, because they've got to plan out this expenditure. In other words, indexation is not always going to be all things to all people. We know that there's not enough money to go around. There never is enough money, but we do need a trajectory of how that financial sustainability is going to be maintained. Now, I've said that should be a 5-year plan because I guess as an accountant, I think anything over 5 years, you're really starting to crystal ball gaze, and whether the proposition is going to be the same or not in 10 years' time is up for anyone. At the same time, of course, you could create a 10-year plan and simply change it as time goes on. It's not cast in concrete. So as economic realities dawn as time progresses, you can make changes accordingly. So that was all I wanted to talk to you about. I hope it all made sense. Our details are there, and really happy to get comments, questions, or, as I said, to be told we're wrong if there's something I would have assumed or not understood. We're really happy to be informed of that as well. There's no problem. So any questions or comments?
Yeah. I'll ask one while we're waiting for others. The disaggregation of the health and social services data, in theory, that sounds like it would be easy to do. Is that not that easy? And if it was easy to do, what's the resistance for the ABS to not disaggregate?
Okay, so there's a number of aspects to your question. I suspect ultimate resistance will come because they don't collect sufficient data from the human services sector for it to be a workable index. So they would have to increase their collection in this sector. They would have to then drop something that they do elsewhere. So the last time the ABS collected substantive panel data from this sector was in 2013. And then you might recall there were successive Prime Ministers, starting with Abbott, that reduced the amount of money going to the ABS. In fact, Abbott wanted to get rid of the ABS. He couldn't see any need for statistics. And I guess if you know how everything should work, you don't need a statistic to help you make a decision. And so, yeah, no, it's an interesting concept. But the upshot of that was that this sector was the, how would you say it, the sector that missed out, because all the other industries were considered that they needed to be dealt with. So it will be kind of a down, you'll have an up because the ABS might get forced into doing something for the sector. You'll have a down because the ABS will have to come clean with what they've actually done. And when I say come clean, the website, you know, we've gone through all the website and we understand what they've done. It's expressed, but you need to be a statistician to work out what's going on. It's not something that you want to spend your whole weekend looking at. And then there'd be an uptick as they collect the right data and reposition it. But like I say, I think, you know, there's a number of industries that the ABS collects data on and creates indexes and other financial information on that are just so insubstantial compared to this sector. It's just mind-boggling that the prioritisation that has occurred.
Or the lack of value.
The lack, yeah.
Well,
I actually think, to put it bluntly, and again, I'm really happy to be disabused, and we're only on the 3rd floor, so I'll survive, I think, if you throw me out the window. But I just think the sector doesn't know anything about that aspect and hasn't really, you know, when you're the ABS Director General or whatever he is, and they're sitting around working out where they can make cuts, they knew they could make cuts in this sector because no one was using the data. And I think that's as simple as that. So I don't think it's that they don't respect it or otherwise. If I'm in their shoes, I've got to make a choice. I cut that industry, they're going to be telling me all about it. I cut that industry, no one's going to know any different. And I think that's the position.
And we don't value it in the way that we should. Or articulate that at least, yeah.
In gathering some of the data with organisations, have you come across any organisations that have problems giving you the data contractually? Like, was there anything in their service agreements that might have prevented it? Because that was just something that came up for us. Are we allowed to under our various agreements?
I haven't heard anything like that, and you have it in other states as well. Yeah.
Yeah.
So I find it very difficult that the contract could prevent you from doing that, but I'd be happy to chat with people if they feel that it's stopping them.
Nothing posted online, but just wanted to double check. I don't know why I'm talking on my phone. Does anyone online have any questions or comments?
I can ask another one.
Yeah, do you want to take your stop sharing your screen so we can see?
Oh, okay. That's
Yeah.
a good idea.
Yeah.
Bradley here. I found it interesting when you mentioned the National Standard Chart of Accounts, David. I come from an accounting background, and not many of my not-for-profit clients have used the standardised chart of accounts, and I wouldn't assume there are a big majority of not-for-profits and community organisations that do use that. It looks pretty old having a look at it, and you mentioned putting it under the microscope. Can that be something that can be, you know, I think that promoting that and pushing that out to community service organisations, if it was updated, would help to centralise and kind of categorise this data.
Yeah, there's a couple of projects that we're working on, one of which you might be aware, and that is creating a not-for-profit accounting standard rather than having the commercial standards apply. And that's in process at the moment. In fact, a bit of an advertisement, I've got a webinar next week looking at that, so please come along to that. But I agree with you. I think that it needs to be updated. I think it also, though, needs to be changed. So one of the big issues I have, if I jump on my soapbox, is the fact that the previous ACNC commissioner and previous government particularly, but others also, consider procurement pricing as funding or as grant funding. And so they misdescribe the nature of money flowing from governments to not-for-profit and charitable organisations as if government's being generous, as opposed to government purchasing something from the sector in the same way as they purchase things from other sectors. So, for instance, you know, the ACNC regularly reports what percentage of income goes to charities that is government sourced. And it implies that it's from government largesse, not from procurement. So we need to change the accounts, the standard chart of accounts, to reflect more truly what is happening in terms of those transactions. So, for instance, you know, we had in the last government a lot of pressure on the sector because 50% in round figures of money was coming from government procurement, which they said was government grants and government funding, as if it was largesse. When you talk to the road management system, so those people that stand in the road at roadworks with signs and so on, 100% of their income from government comes from government. So if you use the same descriptions, those guys, if you like, are worse than the charitable sector in terms of what they're getting from government largesse. But of course, we don't describe it that way. So I think there's a lot in what you're saying, Bradley, and I think we need to modernise, but also change that standard chart of accounts so it properly describes the kinds of transactions that the sector and government are entering into.
And I just, Catherine's just said she's lost view of the room. Is that because you're sharing?
I don't know. I tried to not share, but
is that better?
Can you see us now? Yep. Oh, good. One thumbs up.
It was all good on my end, mate.
Good.
Well, appreciate that, guys. That was great.
Thank you.
Good. No more questions? No. Somebody's driving.
Who said economics and accounting wasn't fun?
Yeah, thanks everyone for joining us. I think it's it's really great to have so many people interested and engaged, and because we think it's a really important project, and I think we'll really see that as we move forward if we don't address this issue. So yeah, thank you so much, David.
Thank
It's
you.
been
Thanks
really
everyone
great
for your time.
doing the presentations
Great to
with
see
you
you.
over the last couple of days. So thanks for coming.
My pleasure.
We might even get David back at some point, potentially, when we're releasing the report. So possibly we've just been talking about that this morning, but possibly we'll do some more briefings. And I think it's really important, just that we're all kind of across this and being have those conversations out there with just particular decision makers. We can influence that. So yeah, it'd be really good. We'll let you know when he's coming back. But thanks everyone for coming. Yeah.
Thank you.
Thank you.